Good afternoon. Welcome to TiE Hyderabad, TiE Talk, a series of webinars we've been doing for the last couple of days. This is the fourth of such session TiE, the Indus Entrepreneurs Hyderabad chapter, is conducting. We're trying to bring to you people from various walks of life and varied backgrounds to talk to us, clarify, and also tell us their insights, knowledge, and their expertise on various topics of very important interest for all of us. This is the fourth one. We are having series of people, guests today on the panel, people from financial sectors. So before we go there, we'll just give you the guidelines for the participants. So these are broad guidelines for all of you. You will be muted most of the session. However, should you have any question, please type it in the questions window. We will share it with the moderator, and moderator will direct it to the panelists as appropriate. So that is the guidelines for you. We'll jump right into the session. To take it away, I'd like to invite Mr. Suresh Raju. Suresh is a TiE charter member. He is also an expert and spends his time in the capital markets, corporate financing, and other areas. He supports many of our mentoring activities within the TiE Hyderabad chapter. Suresh, please take it away from here.
Thank you, Pani. Thank you. And welcome everyone to this webinar today on financial announcements made over the last 2-3 weeks. Look forward to a very interesting conversation. We have a great set of professionals here on the panel today. Let me first introduce Mr. Rahul Shukla. Rahul comes from the HDFC corporate bank. He's the group head, corporate and business banking, 30 years plus experience across regions, both India, Asia, and also is kind of responsible for a significant amount of activities related to the business accounts that they have, and deals with the large corporate clients of HDFC. Along with Rahul, we have Sumant also joining us from HDFC Bank, and Sumant is the business unit head and responsible for MSME healthcare financing, and has a lot of experience, 20 plus years of experience in wholesale banking unit, and will be helping us kind of answer some of the critical questions that people are facing here with all the announcements coming up. Then we also have Mr. Ram Kumar SV from EY, senior partner at EY, with a significant amount of experience in dealing with corporate restructuring, turnarounds, industry experience spans infrastructure, construction, real estate, manufacturing. And finally, our fourth panelist, Mr. Raghunath Akasam, chartered accountant, Akasam Consulting, works with a number of industrialists and also entrepreneurs based here in Hyderabad. And welcome all. Thank you for taking the time today to participate in this webinar. And I'm delighted to kind of moderate this panel. Yeah. As the topic of discussion for today is around financial announcements during lockdown. As all of us know, over the last 2-3 weeks, there have been significant announcements coming from RBI, the finance minister, also from SEBI, touching on different aspects relating to our professional lives, both from running your business to compliance to regulatory to banking related announcements. So this webinar is trying to give you color and answer most of your questions around it. There is some amount of confusion created in a certain segments of these announcements, and there have been clarifications from RBI around that. So I'm hoping that this webinar will give you a lot of insights into what all these announcements mean. So the agenda for how we want to cover the next 90 minutes, I'm going to request Mr. Rahul and Mr. Sumant to kind of talk a little bit from the perspective of HDFC Bank, especially relating to the RBI announcements. I guess the most hot topic there has been the 3-month moratorium on loans and any related corporate action to that. So, what is the process? What should the effect be for both individuals and also corporate loans? What are the different aspects to this? What is the process from a perspective of how HDFC is dealing with its clients? And then I think what we'll do is we'll go ahead to talk with Ram Kumar and Raghunath on what they are seeing from these announcements, especially related to regulatory and compliance. So to kick us off, I request Mr. Rahul and Sumant to kind of help navigate through some of the announcements, especially coming from the RBI perspective.
Hi, Suresh. Thank you very much for inviting us and giving us this opportunity to talk to a wide forum of members. It is very welcome to see that TiE is so proactive because in these times when while a lot of information is available, it is very difficult to sift through all the information and see, what exactly is the correct information or course of action. So my commendations to you as an organization, and that's why it is such a highly regarded organization globally. Just to step back as to what is happening, today. At the end of the day, this is not first a financial crisis. This is not a 2008 crisis or a 1998 East Asian crisis. This started with a health crisis, and today the response is basically focused on two things. Number one is trying to control the biology or the virus, and number two is basically to go out and control or provide certain financial packages. Now, why are financial packages important? Let me just dwell upon a couple of minutes on that. So, in just the last 2 months, the world economy is completely turned upside down. We've seen stock markets collapse. We've seen, airports closed. We've all seen photographs of, huge planes flying in the runway. There are no offices, schools, factories, shops, pretty much everything. Investors fear that they're going to lose money. People fear that they're going to lose jobs. And at this point of time, we are basically seeing the sharpest economic contraction that we have, heard about in our lifetimes, right? So with that backdrop, if you look at it, what should governments do? And when you look at, what should governments do, you need an economic plan, which is, the crisis began with biology, but you still need an economic plan which will support, both households and companies. And when you think about households, at least, we are a very fortunate nation that we have the digital connectivity, which is quite strong. The direct benefit transfers, are quite strong, and the government has announced a lot of measures, around that to go out and reach money to the people at this point of time. This is not a time where we don't have the supply or we don't have, the demand. It is a time where, there is no access to products, either the supply or, the demand. And that is what an issue is. So, taking cash out and reaching it to individual people, becomes very, very important. And we are well placed on that. Yes, we may have a little bit less financial capability to go out and support because like it or not, we are not the United States or we are not China. We are still emerging economy which hopes to at some point of time gets into the developed world. So the government will have to do its bit. We all have to do our bit, which is what we are doing. But the second part of this is basically supporting companies, and you have to go out and get cash to millions of companies, because if they fail, then that could damage the economy's potential. Everybody today hopes that we will basically come out of this in 3 to 6 months, after controlling, and then you should have companies which are standing, which will be able to go out and build the nation again. Different companies, different countries have taken different tack. We've seen the U.S. Fed announce that they will directly invest into corporate bonds. That is completely something that is quite dramatic. There are loan guarantees that are given by Germany. Unclear who's going to go out and process that. And then you have our government, which I think has been pretty proactive in terms of lockdown and raising the measures. So we had initially the honorable finance minister who dealt with the minutiae and the procedures, which basically said that look, if you are a director, independent director on a board, and if you are overseas, one of your requirement is that you have to be 182 days in the country. So let me relax that. That was one of those points. Or if there are certain MCA submissions, let me go out and relax that too. So they dealt with the procedure part properly, and then they came out with the financial package, which again is quite thoughtful, which is within the constraints of our finances. RBI came out with a pre-policy announcement. Number one, they went out and cut the rate, repo rate by 75 basis points. But they announced a series of measures, and both of those can be classified in two different sort of categories. One is just managing liquidity in the system, and the second is how the liquidity is given, that comes under the regulation and supervision department, and how we go out and go out and relax some of those norms. So one of the norms that they went out and gave was the term LTRO, which is long-term repo operation. What that means is that you go out and get the money at repo rate for 3 years, and if you go out and invest that into a bond for 3 years of a corporate investor, corporate issuer, then you will not have, you will get certain benefits. It has a hold to maturity treatment, so you don't get a mark-to-market swing. It is excluding, from the large exposure framework of the country, and of course, the 3-year funding rate is there. Now, how does this help people, right? So for a bank like ours, there would be a top 2 or 3, guys, corporates on which, we would have restriction on limits because of RBI guidelines. We will be able to flow, money to them a little bit more freely during these times. And as you know, it is the very big companies, which basically create a lot of jobs, and credit flow has to, be kept ongoing. The second bit is that look, at this point of time, there was also a little bit of talk of deposit decretion at certain banks, and if there was a liquidity issue because of which people were not lending, you got the opportunity of going out and raising money and flowing credit. So that was one step that RBI did. The second auction happened today, so it's a total auction for 1 lakh crore. And they've given out, about 50,000 crore between two auctions, one on March 27th of 25,000 and one of today of 25,000 crore. The second thing that they did,
Rahul, can I just ask a quick question there? How long or when you think that actually flows down into the system? So the auction was done today, the money is coming into the banks and so on. So by the time it actually hits the companies, whether they're buying the bonds of the companies and so on, is that a 2-month process? Is it a 3 to 4 week process?
Yeah, it is much, Suresh, it's much shorter than that, because the first auction had a 15-day window for deployment. The second auction that happened today has a 30-day, deployment for 30-day window for deployment. So you go out and do this, and there are two things. One is that if basically I get say 10,000 crore, I have to subscribe 5,000 crore in primary issuance and 5,000 crore in the secondary market. If you see during the month of March, even government-owned institutions, bonds for 6 months, which were going to mature in 6 months in say September or October, they started trading at about 850 and 9%. So when you push the demand towards the secondary side, it cools off the yields on the secondary market. So they're trying to do both together, and it's a very short window. So once these are completed within the month of April, by the end of May, all of this money would have gone out.
Okay, so it's a very near term impact. That's great.
Absolutely. The second thing is that to just release more money to the bank, because we normally have 4% of our total deposits, which are kept in something called cash reserve ratio with the central bank, and that was reduced to 3%. So this is something that they avoided doing in 2013. They avoided at different points of times of slowdown when the banks wanted it, when there was very tight money liquidity condition. But this time they've gone out and done that. And the second thing is that, I mean, the cash reserve ratio is measured on a fortnightly basis, but on a daily basis, you have to be within 90% of, your target. They've reduced that to 80%. So that again means a large amount of, money would be available to the banks, which is available, to go out and do lending. So this is, the second bit they did in terms of, trying to flow out liquidity, which I thought, was a huge, facility. The third thing is that, banks go out and sometimes borrow overnight, which is something called the marginal standing facility. And on this facility, you can go out, you have a excess SLR or something, government security investments that, banks have to put their investment in. If you have an excess, then you can take 2% of that, overnight, borrow from Reserve Bank of India, and they, raise that to about 3% so that banks had more money. And look, banks, basically are, that engine which greases the economy, which leads to stabilization and, growth, right? So the whole thing is about, protecting the banks that they have, the liquidity available. So these are, steps largely, that they took on the liquidity side, but they took even more, dramatic steps on the regulation and supervision side, because they said, I will give you a bank can go out and give you moratorium on term loans, which basically means that whatever is your installment that is, falling due from 1st March, until 31st of May, you can, basically push that back by, 3 months. You can push the installment, you can push the interest. They went another step, because certain companies will take term loans, but everybody takes a working capital facility. They said, should you want, and if the bank decides to do that, you can go out and, push out basically the interest payment by a 3-month period. So which was again, to give relief because collections were not coming. The third thing that they did is that, when we analyze working capital financing, we basically have certain RBI approved methods, which are, we frame a policy, we take it to the board, and then we calculate the working capital, facility that is, the maximum permissible bank finance facility that, banks can extend to a company or a corporate. They went out and, relaxed that also in terms of how it is calculated, so that today I can go out and, basically try and justify larger amount of working capital. And we'll talk about that, Suresh, as we go along, because, a large number of questions will be, towards that. Now, these things are not automatically available. Banks have to, basically go out and formulate their policy. And if the bank formulates their policy and extends it to the customer, then, and if should the customer, choose to go out and accept it, it is available, to the customer. That is broadly the range of things that they've done. They've, come out with it today. I don't expect that we stop here. As we see, basically the depth of the crisis, at least there are still more silver bullets that are available with RBI to go out and unleash, and that is, basically going to come out. Now, before I hand over to my colleague, Sumant, to add his perspectives, I lived in Hong Kong in 2003, which is when we were under SARS. I'm living, through this, and I tell everybody that this seems to be, the last pandemic that we will see in our lifetimes, but we have to survive this, right? And the reason is that the amount of, money that will go into virology, epidemiology, or tech and sociology, or sociological technology, etc., we will, go out and overcome. But we have to survive this to thrive after this, right? Because whenever you hit a trough, you can't see, the future. That is when, you basically build the building blocks for, thriving in the future. And as we answer, the questions, most of you, may be a stock market investor. Today, if you are an investor without a borrowing, it's fantastic. If you have cash, it's fantastic. You will be able to, at some point of time, exercise a judgment, and you will, ride the upside. But if you have borrowed money, or you are leveraged, and then, you're playing, that particular game, and if your margin calls come through, suddenly, basically you will say that, look, I'm not even financially viable, right? So that is, what is very, very important. I saw this in 2003. Many of the companies in China at that point of time didn't want to dilute their stake, to PE, because, valuations had really fallen. And I said that, look, you can own 100%, or you as a promoter or a startup founder can own 50%. That 50% means nothing if your company does not survive. If you go out and take equity even at a lower valuation, and maybe you dilute yourself to say 10% or 20%, you will survive. And when the upside comes and the stock goes out and does the listing, then most of the listeners on this call will be billionaires. And that is my final advice before I hand over to Sumant for his comments.
Thank you, Rahul. Sumant, it looks like you're on mute.
So, hi, can you hear me?
Yes, please.
Yeah.
Yeah, so you want me to take this forward, or Suresh, you want to ask some questions and then we move it that way? I can quickly add on to what Rahul mentioned.
Yeah, I had one question, Rahul, just so that I don't forget it. Is some of these, large announcements by RBI around cash reserve ratio cut, and all these things sound like, you're talking about thousands of crores here. And I just was curious how this trickles down to large corporates versus MSEs, right? MSMEs in some sense. Is it going majority to large corporates, or is it have a meaningful impact to the small, medium, mid-sized businesses? And if you
So,
have from your past experience, is there a split that you can think of? If 60% goes to large corporates, 40 comes down, because to a lot of our members and audience will probably be in the MSME segment. That's the reason I'm asking.
correct. So this is a perfect segue question, for me to hand over to Sumant. But I must tell you that it's not thousands of crores. The liquidity that has been made available by RBI is in the order of lakhs of crores, right? So these are not small monies that we are talking about, because at the end of the day, we are a 2.5 to $3 trillion economy. And I'll ask Sumant to take over on
Yeah,
how the money flows to different segments.
yeah. So thanks, Rahul. Just to specifically answer this question of yours, Suresh. So whatever Rahul mentioned about the liquidity which is getting created because of the repo, reverse repo, the LTRO, the mechanics of the CRR, and the various other levers that RBI has released. Clearly, what the banks are doing, and especially for the MSME, as all of you guys would know, that the funding on the MSMEs were directly linked to the repo just about 6 months back or 4 months back. So the downward trend in the repo rate will be an immediate pass on the pricing of their financing costs. Typically, what banks are doing is on the repo, it's a 3 month resetting which is done. So if there is a borrower who is an MSME who has borrowed 3 months back for his or her working capital, automatically gets the benefit of the revised repo position as of today. Somebody who's done it just a month back will get it at the end of 3 months. So the question that you asked, that is it immediate? In my view, it's absolutely immediate, that the benefit of the liquidity and the benefit of the repo pricing and the working capital will come to most of the borrowers. The borrowers who are not MSMEs and who are non-MSMEs but are mid-market or large corporates naturally borrow from the bond markets, borrow from certain instruments where it is directly priced into the rating of that particular company. And as Rahul mentioned, that there is a lot of liquidity. Banks would want to go out and lend to good corporates, good companies which have very strong governance. So money is never going to be a problem for them. And that's the right thing that Reserve Bank of India did in giving the liquidity to banks in terms of making sure that when the lockdown is over, when things become a little more clearer, and we all Indians, as we all have been always on the forefront of getting things back on track as early as possible. I am pretty positive that things should start working in the right direction as far as liquidity and cost of funds is concerned.
Is it possible, Sumant, maybe to talk a little bit about the process of this 3 month moratorium?
Yeah, sure. Yeah.
So
So I'll do that. So, if you really see from a regulatory perspective, there are three things that are very important for a borrower. One is the cost of funds of the working capital and the cost of funds of the long-term loan, which is basically the capex money that he takes for funding his long-term assets, and in how the structure is put across. So we have been, what we have done is, as a bank, we've sent out communication to all our customers that if you think that you need a change in your financing mode, which is that you need the moratorium which has been allowed by the Reserve Bank of India for your term loans, we are happy to provide to you, but you have to ask that from us. Second is, on your working capital, wherever there is an interest that you have to pay, if you are wanting a deferment on that, you have to ask for that. And also on the working capital, the structure that you want. So if you want to move away from a typical cash credit to a cash flow based financing model, or from a cash flow based financing model to a cash credit model, or you think your stocks or your debtors are getting stuck because of X, Y, Z reasons, which is directly related to COVID, you need to provide us that input on a simple one sheet of paper, and our relationship managers will talk to the specific corporate, and within less than 24-48 hours, they will kind of turn it around for you. As far as the moratorium and the deferment on the cash credit is concerned and the term loans is concerned, if you ask for it, it will be straight through as a process. So we've made it digital, we've made it available on our web, where customers will apply to us and they have the option to reach out to the relationship managers, whether it is a large corporate, a mid-market, or a MSME customer. And for our retail customers also, they can go through the web and apply there. So it's been very simple, no complication at all. A request coming to us, giving the details of what they want, because there are, what we have seen is when the customers have called us, a lot of customers have said that we do not want that, because typically what happens is that interest is paid on a monthly basis. EMIs are either paid on a monthly, quarterly basis. So when they take the deferments or when they take the moratoriums, they don't want to get burdened of that consolidated position at the end of the quarter, which is on the 1st of June. So a lot of customers have said that our cash flows are good at this point of time. We want the debits to be done to us, but allow us to structure our working capital in a different form, or give us the benefit of the interest cost, which is what we are doing with our customers, depending on how they have funded themselves and how they are structuring themselves. I hope I have given the answer to the question that you asked.
Sumant, given the interest around this topic, if you don't mind, I'll just shoot a few basic questions and then we'll probably come back to this after Raghunath and Ramkumar also speak. In
Sure.
my understanding, there is no difference between, I guess, a corporate or a business loan versus an individual loan. Is that true? From a moratorium perspective?
Yeah, from a product, from a moratorium deferment, there is no difference.
Okay. And this has to be elected by the borrower. It's not automatic. Yes. Okay.
No, so we as a bank have taken a position, and a lot of banks like us have taken a position that we have requested the customers to elect or request. Some of the banks have taken a position that it's automatic. Now, the reason that we have done the selection or the request process is because we believe a customer, a good borrower knows his or her position on cash flows, knows his or her position of balance sheets. So he or she should be able to put a request to us, and we will be immediately able to turn it around.
And Sumant, just to add, Suresh, look, the reason for election is that, during the lean times, companies go out and cut costs, right? They postpone capex, they conserve cash, and they may even want to reduce their debt burden so that the interest outgo is also reduced, and the break even, basically continues to, in a way, sort of improves. So if you look at it, from that vantage point, I think it's just a election, by the customer, and if the customer elects, they will get the moratorium.
Okay, and it doesn't have anything to do with one loan versus multiple loans. It can uniformly apply to all the multiple loans.
Yes. So just to give an example, if a MSME customer is there, MSME customer has borrowed in the form of a cash credit facility, has borrowed in the form of a term loan facility, has taken facilities of export financing or import financing, the customer can request the bank, that is HDFC Bank if he's our customer, for the deferment of the interest to the 1st of June for all the facilities, and the bank would do that, and also can come and say that I need the moratorium for my term loan, and the bank would do that. Of course, there could be certain positions that bank would take on the trade facilities, which are the imports and the exports, where we may ask one or two questions regarding how the process are being conducted by them, just for our own information as a good governance process. But we will make sure that all of that is available to the customer immediately.
And under any circumstances, can the bank deny?
Yes, we have had certain circumstances where the customers, as you know, not every customer has been absolutely transparent or has been in line with the terms and conditions of the sanction. And specifically, there are certain very important terms and conditions which the regulator wants to control. And one of the most important one out of that is the movement of cash flows. So for a MSME segment or a mid-market segment, and where the bank is a sole financier to that particular borrower, if there is that we have seen that the cash flow of the company has been routed through some other institution or some other bank, we would want that cash flow to be routed through us, so that it's a credit and a governance issue and a regulatory issue. Barring that, I don't think so there is anything else that we will hold anything on. And that's directly linked to the Reserve Bank of India's requirement also.
And can somebody just turn off the auto pay on HDFC Net Banking for individuals? Is that how it's done? Or
I'm sorry?
The auto pay on EMI, could you just disable net banking? Is that an option?
Suresh, as far as I know, there is an option for that, but I will have to get 100% confirmation on that, and probably I can come back and we can host it on the TiE network. I would not be able to confirm that.
But look, I'm sure there must be that facility. I have not tried it, so I don't exactly know about it. But in case any TiE members are having an issue, they can just call their relationship manager, and that issue will be dealt with immediately. Because you are going to get the moratorium at your request, and just because you've elected an auto pay in the system doesn't mean that you can't basically undo that or call your virtual relationship manager and get that done.
No, but just to answer that point a little more clearly, as far as the moratorium position is concerned, there is an auto pay which is happening, and that auto pay must be for an auto loan or a two-wheeler loan or a loan against property or against unsecured loan. If you go and apply on our web that I want to go out and take the EMI moratorium for the next 3 months, which is till 1st of June, then automatically that auto pay for those 3 months will not be used. The installments will get extended by the 3 months period, and a communication will flow back from our systems on the revised EMI structure for you, so that that customer does not have a problem at all on that.
So maybe we'll just hold the rest of the questions on this topic for a little bit later in the webinar. Can I just go ahead to Raghunath here and request him to talk a little bit about the compliance and other announcements that had come in the last 2-3 weeks?
Good afternoon, all. So I think as businesses, we worry more on compliances in India than business itself. And more so in this kind of crisis where filings require information from multiple sources. And we definitely do not know who is working, who is not working. So all may be impaired to provide that information. So in this situation, a quick response from government and a quick issue of notification on regulations, regulatory compliances, relaxing these timelines is a very welcome step. And if I categorize this into 3 categories, so one is an income tax compliance and payments, and coming to GST filings and payments, and then coming to Registrar of Companies, MCA filings. So taking to income tax and indirect tax GST. So what the government has done is to consider a 3-month window period, 3-month extension for all the things that are either a deadline of 31st March is extended to 3 months, or whatever comes between 20th March to 20th March onwards to 3 months, 20th March to June, so to 30th June. So this 3 months has been consistently adopted both for income tax and also for indirect tax, that is GST. And coming to first thing in income tax, we have belated returns or revised return filing deadline. So, and that deadline is 31st March 2020, and that has been extended to 30th June 2020. So then coming to Aadhaar and PAN linking also, 3 months leeway has been given. So you have 30th June as a new deadline now. And the new scheme which has come in, Vivad Se Vishwas scheme, again 31st March was the deadline and it is extended to 30th June. So these are some of the important steps which help us to take time in this calamity that we can look at filing within next 3 months. Coming to indirect tax, so similar approach. Whatever monthly returns that we have to file statutorily. So starting from March, April, and May. So the revised time is to file before 30th June 2020. So this is a big relief again. And if you look at similarly annual return of 1819, so which was due on 31st March 2020 is also extended to June 2020. So these are major deadline shifts which will help us in this background. And next, coming to any payments of advance tax and all. So when payment is coupled with filing forms, the payment deadline is extended, but at a cost. So the interest rate has been reduced to 9%, both for indirect tax and direct tax. So whatever tax deducted at source, whatever advance tax that you pay, so the interest is softened, but interest is still levied to pay. But the only big relief has been given to smaller companies. That is, companies having turnover less than 5 crore. For these companies, GST payment can be done by June 2020, but there is no interest, late fee, and penalty to be charged. For the companies above 5 crore, the interest is at 9%, but again, no late fee and penalty will be charged. So this is the approach that is taken. And definitely these regulations have come in at 24th March. And when this COVID is in the initial phases, so we don't know how the government thinks and how this extends further. So, but the approach says that if there is further difficult time, probably the government may take further lenient approach, is our thinking. And if not, so this itself will be the relief with which we have to work forward. And coming to companies which have to file MCA forms, which is the regulatory and time to time for all corporate actions we have to file with MCA. And here there has been this moratorium period that has been announced. The moratorium period is from 1st April to September. So this is the moratorium period in which you can file without any financial doubling of the fee or additional fee. So this is a moratorium period which can be used by all the companies, and at least there need not be a hurry in filing these forms for compliance. And another important aspect is IBC, Insolvency and Bankruptcy Code. So now, because of the cash flow issues the companies go through, so there's always a possibility that you default on payment. So now IBC code is very harsh. So any 1 lakh non-payment will lead to somebody filing for insolvency of the company. So the timely action government has done is to increase this lakh of rupee limit to a crore of rupees. So this helps many companies to face this situation and not coming under any IBC code, and which is a severe action on the company for any payment default. So where companies get into issues on cash flow management from several aspects, because we do not know how each business is impacted in this crisis, whether having sales, not having sales, whether getting their payments from debtors. So with all the cash flow uncertainties that the business is facing, this IBC code approach is a relief. And there is a further rider that if the situation continues like this, maybe there will be further relaxation of IBC code section where companies will not be pulled for bankruptcy in case of cash flow issues. But when I look at this extension of timelines and at a lower interest rate, time given for payment, the companies which are already prepared and having cash flows, we advise them to comply. So the companies which have to think of cash flows, wait and watch. So at a lesser cost of 9% rate of interest, they have to take a decision, weighing the situation, looking forward in next 1 month. So I think this sums up the most of the financial measures issued by the government on 24 in view of COVID.
Raghunath, I'm going to put you on the spot with one question, which may not be
Yes.
directly related. But a lot of people are talking about this forced measure type of clauses in some of the contracts, and in India we all talk to our chartered accountants. Are you seeing some of those questions come to you from your clients and saying, "Hey, can I use this forced measure clause and not pay this rent or whatever it is that I'm due to pay to somebody as per the contract"? Are you seeing any of those noise starting to come to you?
So thankfully, not so far. So far, the window of force measure to be used in business context has not come out. So the reason could be that we are at the beginning of the crisis, and people have to really evaluate how this is going to pan out on their cash flow situation. Definitely, there is a worry on how the future is going to be, but the immediate thought is not on using the clause to save themselves. That situation has not come. The initial phases of what we are seeing is understanding between businesses, understanding between customer and supplier. So that's the phase that we are now seeing. And yes, may come in as we go forward.
Thank you, Raghunath. Can I request Mr. Ramkumar now? I think Ramkumar, we have heard from HDFC, we have heard from Raghunath here. So if you can throw some color from ENY perspective and your own perspective on how you are adjusting and also, I guess, advising your clients to talk about managing cash flows from a corporate or a business perspective, and also should they avail of this moratorium? Should they not? Should they go and talk about working capital with the bank? How should they restructure? Is there ability to increase margin on line of credits or bank guarantees and stuff like that? What is your general views and kind of what you are seeing in the market around this topic? Ramkumar, maybe on mute. We still can't hear you.
Can you hear me now?
Yes, Ram.
Yeah, okay. Let me probably start from where Rahul and Sumant were trying to tell about using moratorium, etc., from individual first, and then probably we'll expand into businesses how this will pan out subsequently. I mean, like what Sumant was trying to explain, some of the banks have used opt-in, some of the banks have used opt-out. For example, it is actually opt-in by HDFC, probably by Kotak it is opt-in, whereas Bank of Baroda is opt-out portion. That means irrespective of who you are a client, they have just given you moratorium. You need to go back to the bank and say that, no, I don't want it, I want to pay. So that means you need to be careful with the bank whom you are using, whether it is opt-in or opt-out. So that's the first thing to start with. Then the second problem is individuals are much easier to handle. I mean, for your housing loan, you won't have two banks lending you. But for businesses, you'll have multiple banking consortium, etc. And what happens if one of the bank is opt-in and one of the bank is opt-out? So that means you need to quickly reach out to the banks as a consortium for you to take advantage in case you want to do use this moratorium. So it becomes a little bit different than individuals there. Whether to use the moratorium or not is not going to be whether the bank is willing to give you or not. It is actually about your cash flows, which is what is the most important thing. Probably the way we are telling most of our clients, customers, whoever we are talking to, etc., is for at least for next 6 months, put your cash flows for monthly basis. Try to understand where your cash flows, what your cash flows look like. There could be a lot of discretionary expenses which you would have used in a normal scenario. Avoid them in this. Probably you try to take only the key important cash outflows which you have. And where it is going to affect you in a bigger way is your customers, how are they affected, is going to equally impact your cash flow. If your customer is unable to pay you, so that means your cash inflow is going to be affected. So you need to understand your risk profile of your customers so that your inflows will be known to you. Same thing is equally important for you for your outflow, which is nothing but your vendor payments, etc. So is there ability and for them to hold it. The bigger issue which will come for you from an outflow perspective is you would have got a clean credit of 60 or 90 days earlier, but your suppliers will say that no, I would like to have cash upfront so that he can survive. So that means your cash flow cycles are going to completely change. So you need to put those cash flows into account and then understand how your cash flow, probably the next 10 days will be critical for most of the businesses to measure how their cash flows will look like. And finally comes, if you are negative, what do? Probably you need to go back to the banks for some working capital funding, etc. Then you can ask for it, you will get it. So that then you will adjust the way you want to look at that. If you are not short, do not use any of this moratorium is what I would say, because it always comes with a compounding impact, whether you are an individual, whether you are a corporate, it comes with a kind of a compounding effect. So it elongates your repayment period effectively, and you end up paying a higher interest automatically because of that. So cash flow is the most important thing which we are trying to tell. So normally for any clients which are in distress, we normally suggest a weekly cash flow, rolling cash flow of 13 weeks and extend it to 6 months on a monthly basis to understand where do they look like. So this is the most important thing which you need to consider whether you want to use this moratorium. Irrespective of whether you have a borrowing, no borrowing, the most important thing which you need to start working on is your cash flows, is what we would say, for you to understand where you stand and how do you want to position yourself in the next 6 months or maybe even 3 months for that matter, once the revival starts happening in the market. First revival, when it starts happening, people may probably initially will start looking at only essential buy. Discretionary buy will be postponed. So if your sales is something to do with your discretionary buy of your customer, that means your cash flow is going to get affected. So you need to be slightly different in understanding your cash flows and managing that. So that means you're not an independent company which is not going to be affected by anybody. Your sales is going to be affected by what you are selling, what are the types of services which you give, etc., and the type of customers which you have. So if it is essential, like for example, we all use mobile phones or Wi-Fi, etc., at home. So it's an essential buy today. I mean, if you don't pay for it, you don't get that service. So you need to use that. So it's the essential one. So those kind of companies will differ from a discretionary luxury item, how you look at it, etc. So that means auto companies will have a different kind of an impact because of this. So they need to look at the moratorium differently compared to somebody which is an essential buyout, which is like a consumer goods, etc. So I mean FMGC, etc. So that means these are different ways you start looking at this. Which are the things which will get affected clearly in a company? Probably your supply chain will get affected. You will have your risk going higher because most of the employees would have been working from home. You can have tech related risk going up, financial sector risk going up for you. So that's something which you need to bother about, which we would not have bothered when people used to come to office, etc. You need to work around your human capital. That becomes the much more important thing now at this stage. So these are things which we see. Of course, like you said, somebody will talk about force majeure clause to be used, not to be used, etc. So legal, contractual will have to be looked at. I mean, from all angles, you need to relook at your business and business model here.
Thank you, Ramkumar.
So Suresh,
Yeah.
just to add what Ramkumar just said, and and this is, I'm assuming a lot of listeners are from the MSME space here. My request to all of them would be is that transparency of the cash flow and transparency of going out and negotiating with their principals if they work with large corporates or large government institutions, and how that contract or how that purchase order is going to be used is something that they should transparently go and talk to their banks and see if a structure on cash flow based financing can be worked around there, rather than going in for a plain, simple, vanilla cash credit. Some of the examples which have come to us in the last few days of looking at financing, and let me just take an example on essential goods. So a lot of companies who do processing for some of the big brands, whether it is biscuits or whether it is bread or whether it is agro commodities, what we would say to them is that if there is a large corporate who would want to go out and buy these goods for you, get a good, nice contract, put in the cash flow in such a way that that cash flow is available to the bank. There is a transparent movement of finance against the purchase order into a post-shipment finance, and then against that take the financing. So some of those unique structures will have to be worked around so that it becomes much more easier for an MSME specifically who were used to only a plain, simple cash credit in the earlier life cycles of financing.
Thank you, Suman. One question just came in, I guess, very related to what you were just saying. The question is, a lot of the financiers are going to get requests for additional facilities, additional working capital lines to meet the liquidity. What's not there in the books today? Because as a business, I don't know how much my turnover can drop in these uncertain times. How, as a financier and a banker, are you going to assess the requirement? How long could it potentially take? Because the recovery for my business or for different industries is different and very divergent. So cash flow projections are actually going to be super difficult, especially for the next 1 year, right? Under those, as bankers, how do you look at this? What would you recommend people to think about?
Yeah, so that's exactly what I was just saying a few seconds back, that there have been requests which have come to us, and clearly it's important that everybody needs to understand how their behavior has been with bankers in the past. That's going to play a very important role. Transparency of movement of their cash flows, which is one of the most important things, and this is more critical for a MSME, which is a micro, small, and a medium enterprise. And an emerging enterprise, that their cash flows, they should be able to show that they are transparently moving into the banking channel itself, because that's been an area which has been an area of concern for a lot of bankers in the past. But further going forward, as you rightly said, that there could be some businesses which may not be able to showcase how their cash flow positions or projects are going to look like. And that's the reason it's important that we go month on month, rather than somebody coming in saying that I want this cash credit facility now enhanced for the next 1 whole year. I don't think so any banker would be able to do that for him at this point of time. What they would be able to do is look at a monthly kind of a position, and it's important that the relationship manager of the bank and the corporate talks to each other on a regular basis, keeps them updated on how the positions are. And we as a bank, our turnaround times on MSME businesses are less than few days. When I'm saying few days, is 2-3 days. So what we are suggesting to our customers, you get an export order, show us the export order. If required, we do a quick call with the party who's giving the order to you. You get an order from Indian large corporate, get us to have a quick call with the buyer against that particular contract. How is your supply payments going to be? What is your cash flow for that order? And we fund you against that. you have a regular cycle of debtors, you have a regular cycle of stock, share it with us. Let us know that, okay, your stock positions are going to move in this particular direction, or your debtors have got elongated. Give us transparently some arrangement. So if you have sold already, invoicing has been done, and the debtor is saying that instead of making the payment on the 30th day, will make the payment on the 90th day. Give us the transparency of that, and banks will certainly help you out. And luckily, that's what the para 4 of the RBI circular tells, that banks can go out and do those kind of realignment of the working capitals. And in my view, between a 3 days or 2 to 3 days for the size of the relationship to 5 to 7 days on the size of the relationship, a bank should not take. If somebody is taking more than 5 or 7 days, means that particular borrower needs to really take that thing to the next level within the bank.
Couple of more questions around the same working capital, Sumant. The question is, if the borrower is requesting a reduction in margin or a relief in security related to LCs or BGs, can the bank deny them, or as part of the RBI regulation?
No. So as part of margins, and that's when they are looking at a reduction in margins for their stocks, on a case-to-case basis, banks will look at it, looking at the situation, because that will help that particular borrower to manage the cash flows better. And certainly banks will look at it. In a normal course of time, they will look at it. But yes, if they certainly smell something which is not up to the mark, they can deny it also. Let me not say that it is across the board that the stocks, the margin of stocks will reduce. Similarly, on the non-funded lines for large contractors who will take bank guarantees and LCs where they would have given margins of 20%, 30%, 50%, and they would want to unlock those margins for their cash flow requirements, they can certainly approach the banks, and banks will certainly support that.
And then I guess it's more of a procedural question. Since the moratorium is applicable from March 1st, if somebody had made the payment at the end of March because of auto selection before, can they claim that money back or get money back from the bank?
So if somebody who has made an installment in the month of March, or has paid the interest for the month of March or the 31st of March, and is now opting for the moratorium, that particular individual can ask for deferment of that installment of the month of March, and he will be refunded back. And but that client needs to understand that he is taking that relief for the next 2 months. He will have to pay that deferment or that interest on 1st of June, which is where Ram Kumar just mentioned, that the whole compounding position and the whole impact of everything coming on one day is something which has to be looked at from the cash flow of that entity's perspective. But we as a bank are certainly giving the refund back if they're asking.
And this whole process of deferment of EMIs is actually going to increase the number of EMIs, right? Eventually, they have to pay for it. It's not a one-time.
Absolutely. So just to give an example, if there was a term loan that an individual had taken for 60 months and the deferment of 3 months has to be taken, the loan installment gets extended and that loan becomes a 63-month loan.
Yeah.
Easy way of calculating that.
And sorry, Ramkumar, just a sec. And on the EMI deferment portion, the interest which he was to pay, there will be a compounding effect of that interest on interest naturally, because that's the way money flow works across the globe. Yeah, Ramkumar, you were asking something.
No, I just wanted to say easy calculation for anybody is, if your repayment term balance is 2.5 years, you add 1 month. So if it is a 5-year, you add 2 months. So you keep calculating that way. So you can, it's much easier for as a calculation to do.
Sure. But the good part is, Suresh, it's important that we let everybody know that when they apply for the deferment, it's very critical that they do go back. You know, typically what I've seen is businessmen tend to miss out on their MIS. So they would apply for the deferment and they don't track the advice, or they don't track the due dates post the deferments or any of these loans. They must ask their bankers to provide them the revised payment schedule. We as a bank will provide that digitally back as soon as the request is put across to you. But by chance, if it doesn't reach out, it's important that the borrower does ask that from his or her banker.
Yeah, I think that's very helpful, Suman. I'm not seeing any further questions on this topic. So I'm assuming that we have been able to articulate clearly what the implications are. Please, if anybody listening in as members, if you have questions, please drop them in. Happy to take them and put them here. In the meantime, I'm
No,
going
so
to
one thing which is coming to my mind, and I
Yeah.
must clarify to people, is that people who do opt for this particular position of deferment and of moratorium, if their cash flows permit and they want to pay, even in spite they've applied for a deferment or moratorium, they should go back to their banks and pay it out, so that it becomes a good record for the bankers for a future reference. I think that's something which a lot of customers may want to know, whether if they've applied for the deferment and if their cash flows do permit in between to make the payment, will they be allowed? Yes, they will be allowed, and banks will take that money. And on there is a very critical reporting which happens, which is very critical from an MSME perspective, which is called as the special mention account, which is called SMA, which is very critical from a rating perspective. So this SMA reporting for this period of 3 months, only for this period of 3 months, has been put on hold by the Reserve Bank of India. And starting from 1st of June, that whole process will again restart. So it's very critical that on 1st of June, whatever installments or whatever interests are coming because of the deferments are paid out. And if they don't, then banks will be asked by RBI to make sure, until unless RBI comes out with a new notification. But at this point in time, that is what the position is.
Yeah. No, that's helpful, Suman. So what I was saying was, we'll switch gears a little bit. Wanted to kind of get your views on this whole working from home and how you're managing your teams, your staff. How is the culture? What are the things that HDFC had recommended internally for you? Are there learnings from that for business owners, entrepreneurs who are also trying to manage business from a remote perspective? Love to hear from all of you.
Yeah, so let me just give you the perspective from my business and my team. And we were one of the first teams in our bank which went on work from home, and we being business guys and not the front end branch operating people, where within the bank the branch people have been sitting at the branches and they've been facing the wrath of the COVID, and the operations team who's been facing the wrath of the COVID by reaching out to the back offices. But our teams, what we have been doing, Suresh, is that one of the fundamental positions that we took was that it's very important that we communicate with each other very regularly. So as a process, what we've done is, within our teams, we do 2 con calls a day, one in the morning, early in the morning, which is a 40-45 minutes con call with the entire team to just generally give them a flavor of what's happening in the financial world, what's happening in the commercial world, and in the evening, a half an hour call so that people can give their perspective of what's happening across the country. And this is a call which is attended by all the team members across the country. That is one way of keeping the communication channel on. Second thing, what people have been doing, which is relationship managers, is that they've been talking to every client of theirs on a regular basis, and making them understand what the position is, because I believe strongly, and we as an organization believe that today it's very important that we communicate a lot of things, and it's okay to over communicate at times, and this is the time to over communicate customers and give them the comfort that we as a bank are there for them. And it's not only just financing support, but just even talking about what's happening to an individual gives a lot of comfort to each other. So that's the other thing that our teams are doing on a regular basis. Apart from that, one very critical thing or one nice thing that we've done on our groups is that we keep letting each other know how many steps we've taken on the day, so that there is a little bit of a competition within our teams, that who's taken what number of steps in the home, and trying to see if we are pretty active on things. There is another competition that is going on within the bank, that everybody shows their home desk, how neatly he's kept by putting his picture of the home desk every day. So that's the other thing that we've done. So these are the little things that we've done to keep ourselves active and making sure that we are enjoying whatever we are doing at this point of time. Over to you, Rahul and Ramki.
Kumar?
We have something called as Microsoft Teams, which connects us seamlessly across teams, etc. So I think it's much more tiring than working in office, is what I would say. Meeting clients is what I used to like, but now you need to only talk to them over the phone, and there is no time for anybody to talk. So it makes it a little more difficult, and everybody talks to you at any time which they want. They just simply call you. There is no other choice of connecting with each other. I don't know how the world would have looked like if this happened some 15 years back without WhatsApp or any of this. So I think WhatsApp is a great thing which has happened before COVID, is what I would say. I think a lot of businesses will change the way they are operating today. They will become little more digital. So I think one of the things which whoever is on the call should learn is relook at their business plan for future. Probably a lot more businesses can work from home, is what we have started learning. So that is something which is a learning which we need to take ourselves into. Otherwise, what will happen is the disruption is faster than what we have expected. I mean, look at what has happened to the climate. I mean, governments, everybody wanted the climate change to happen. Nothing happened, and one single virus has changed the whole world. And we have clean air out all outside. So it can, the disruption can come from anything now, is what we can understand.
And I think in consulting practice, we are not seeing much of a change because we have always been working on without much of a physical presence. So all our team works from wherever they are. I don't even check where they are when I call them. So, but only positive is that we are getting more promoters time. Sometimes we need more of promoters time. We don't get it in normal times, but now we are getting more of promoter time. So we are more swift now as far as consulting practice is concerned. But when it comes to audit practice, yes, there are challenges because we need being an assurance practice, so it's more interactive, and you need documents, evidences, discussions. So that's getting impaired. So the teams are engaged in doing some other back-end work rather than this, and we are continuously in touch. So that way, audit practice is a bit affected, but not much in consulting.
I see a couple of questions here, so let's just take them. The question is, okay, thank you guys very much for helping us understand the existing loans and how to deal with the moratorium. Is there anything from these announcements for new applicants of loans? If somebody is applying for fresh loan, is there any help here in terms of speed of, I guess, approvals or anything like that in these announcements for new loans?
Rahul, we can't hear you. Rahul, you're on mute.
Yeah. In terms of it's a bank to bank, right? I mean, because you will always have an issue that do you have enough staff who are processing? Of course, most of the banks are running, completely, right? So it's just best to use digital channels. If you are, a customer of HDFC Bank and you wanted, a personal loan line, or you wanted, loan against, your investments, or just an overdraft against your fixed deposit, you can do all of these things, digitally and online, which is instantaneous. For that, you don't have to, basically wait a long time. If you have new proposals, you can again, basically deliver that electronically to the bank, and the bank will process and come back. Before COVID struck us, HDFC Bank on the MSME side, we've been, working on a system for the last 18 months, where you upload a certain set of documents and you basically get your full sanction within 3 hours. And I guess the RM used to, take those documents and scan it, And as we go forward, we'll have to just make sure that the clients, directly upload everything, and it's a straight-through processing using artificial intelligence, which we will, employ to go out and provide. Look, RBI disincentivizes banks keeping money because they've created an asymmetrical position where the money that you leave with RBI will earn you several tens of basis points below the rate at which you can go out and borrow. And so there is the incentive to lend. The banks also have an incentive to lend, because if the economy is not growing, you have to go out and find those good borrowers. So anybody who basically has all the paperwork, a genuine business need, it complies with credit extension on the regulatory side, you should be 100% confident that banks will come out and support, because the banks today are realizing that we are an essential service, not only for just running and giving cash to people, but the fact is just greasing the economy, so that we can protect it and then help it grow. So you will have that available. Be very confident about that.
Thank you, Raj. So banks are looking forward to these companies to kind of, upload the information as much as digitally as possible, work remotely, work with the companies to kind of process these loans. And they're obviously in business and nothing is stopped from the new loan perspective, right, Rahul?
That's correct, Suresh. At the end of the day, look, this crisis across the world has shown us that if we drive a little bit less cars, the environment can be much cleaner. And it has taught you again, basically that family value that, which we were missing, being at home. And so
Yeah.
today, while there is a disruption and we are talking about work from home, you give it, some time, it will be a work from the park, work from, the school kids, kids school, etc. Because you're going to be able to work from anywhere. If I want
Yeah.
to sit under the tree and, work, we will have miniaturized gadgets with very smart, quad play capabilities, which will, come into production, which is going to help us do that. Just imagine, the sale of PCs and laptops were declining, and today you are just waiting to buy two or three more, so that your house is set up for pretty much any and every need. That is where the demand is going. So tech will be a big beneficiary of this, and we will just change the way that we've lived and worked. I've told the team that, look, you guys are working as efficiently without pretending to be very busy, because normally you sit at work and you are there till late, and now you're going back and you're still as efficient. So why would we go back to the same old rigmarole when normalcy returns?
Good point, Rahul. There are a couple of other questions. One maybe to you, Ram Kumar, a little bit, but it's a question saying that the company has businesses across the globe and has supply chain dependencies in multiple countries. So, what is the advice to the company on how they should think about the different scenario analysis? Right? I know it's a little bit of a tougher question, I think. How should they think about the scenario analysis? And from what your understanding of the current situation is, how should they think about the disruption? Should they think about this as 2-quarter disruption? Is this a 1-year disruption? Being in a global business, how do I evaluate the situation? I'm sure anybody with thoughts, please jump in, but I was just pointing to Ramkumar first.
Okay, let me give it from my experience, which I've seen in one of the businesses. It's a pharma company, and probably 3 months back, I had when we were helping them to do something, there were a lot of customers and there was no raw material because China was shut. And today, China has opened and they are giving raw material, and India is not in a position to get the raw material into the factory manufacture, and we are unable to ship because aircrafts are not available, and the customers are not ready in Europe and US to take the same finished goods which we can supply. So the disruption purely from a supply chain logistics perspective is only a temporary one. So all we need to wait is for time to happen. Maybe another 1 or 2 months is when this will start. We will start understanding how it will behave, etc. Now coming to, if it is not a pharma, if it is something to do with anything else, what happens is the next question then. So let us say that it is something to do with tech. If you're Europe dependent, it's going to take a little bit different timing compared to what's going to happen in US, etc. So it depends on the individual geographies, how they are going to be dependent on your product which you are doing. So your service or your product, what is the end use of it, is going to decide how your supply chain logistics is going to work on that. But generally looking at it, I mean, I'm not privy to which sector he is talking about, so I'm again going back to something like a pharma. uh, Again, within pharma, if it is something which is an essential, like a chronic illness like a diabetes, blood pressure, or oncology products, probably nobody can say no to that. People will start buying. It's only a intermediary problem which you will face within next 2 months or so, but subsequently it will become normal in terms of everything. But if it is something to do with non-essential, like for example nutraceuticals, etc., it is ability to pay is what is more important than the chronic illness which will drive towards these kind of things. So it's all about the product. That's why I said you have to relook at your business plan, probably going forward, how it is going to change, and your geography and markets where you buy from, where you sell, is going to completely change in the next 1 year, 1.5 years to come now.
So Suresh, let me just try to give an example here. You know, this is a live example which happened just 2 days back. So there's a large distributor of consumables to hospitals. And earlier the model was that that particular entity was selling on smaller quantities to multiple hospitals across the country, which are state and central and private hospitals. Now, because of this need for a certain set of equipments and certain set of consumables, this particular company has a requirement to import a very large consignment from China and from Europe for taking care of the needs. Now, in a normal circumstance, the management would decide as whether I should go out and do this transaction. But this consignment is directly going into a back-to-back tie-up with 2 or 3 large private hospitals and with the government of India, central government of India. And he's approached us, and we are funding that whole transaction. And the transaction size is a multiple of a few hundred or few crores. So clearly, you know, banks will take a position on the transaction and the contract and the timeline of the contract. And this contract is going to get executed in about 30 days max. So there should not be a problem. But if he's going to go out and say that I want to buy these consumables to go out and do a distribution of that, then there will be a challenge that he or that particular company could face on that.
Couple of more questions here. One related to, again, cash flow financing. The question again is, I know you've addressed this, Suman, but the question is, how soon can cash flow financing be approved, given that his customers are MNC customers who are unable to pay as employees there, are claiming that they can only process payment when they're back in the office. So in the meantime, in the interim...
Yeah, so here I understand what the point is, but it's critical that this particular company needs to go out and get a confirmation from the said MNC companies, because the MNC companies have very clear-cut guidelines on who is allowed to confirm on the payment cycles. So if it is a large MNC company and says that I am right now not able to go out and process, but I have a confirmation that once we reach office or once this whole lockdown or the whole process is over with and we will make the payments on 30 days, and we have a confirmation from a senior guy in that MNC company, bank should be able to fund him in less than 24 or 48 hours.
That's helpful. One more question on this. Let's assume that one MSME has taken the moratorium route and the other competitor has not. Will the credit rating of these two be different, even though moratorium is allowed in these special circumstances? Is there a hit to credit rating by electing to do the moratorium?
Electing to
choose on the moratorium is he anyway disadvantaged compared to a
No,
competitor who has?
no. There is no disadvantage. That's what I just mentioned, that whoever is applying for the moratorium or deferment, in any ways, the Reserve Bank of India guidelines are very clear that there is a clear freeze on that whole SMA reporting for the period between March till 31st of May. So there is no impact of that to any credit rating.
Okay, thank you. I guess we are kind of about 10 minutes away from the session here. So can I ask a more broader question on the note to kind of end this on a very positive thing? Can you guys talk a little bit about what you are seeing as the bright side of what we are all going through from the pandemic? Where will we be and how things could be a lot positive from here? Whether you want to talk about industries or behavioral changes or anything else that you see as a positive outcome of what we are going through. Maybe I'll request Rahul to start.
Look, and the positive is at the end of this crisis, I think India is going to come out stronger than a lot of nations, because even the global multilaterals are today saying that we are not going into recession. It's too early. We don't know how long the lockdown will last. We just got news that Singapore has announced a 30-day extra lockdown at this point of time. But the second thing is just the Swachh Bharat or cleanup, right? I recall 2003 in Hong Kong. After that, it became a very clean city. And that happens because people suddenly realize, in terms of their behavioral patterns, the necessity of, basically being clean and leading, basically a certain amount of personal hygiene, which is very important. The third is there will be a lot more, focus on digital. We will be a big consumer of, that digital because we are a 1.3 billion society. It is going to provide a huge fillip to manufacturing, the electronics locally. So at least I am positive on that because, we have to realize that at the end of this crisis, all MNCs are going to look at their supply chain concentration in China. And there will be deglobalization, and there will be creation of manufacturing that will happen locally for local markets. So we will basically become a hub of something to that effect. I don't know, how we look at the auto segment, going forward. I hope it gets back. We still, have a lot of ownership, etc. But maybe there will be just a greater focus in terms of sharing of resources, right? Uber and Ola were anyway more popular. I guess the adoption of many of these, tech-driven industries is going to be even more. And that's where I kind of stop. Lastly, one of our age-old issues is just the distribution of agri products. And if you think about how the supply lines are working today, I think you will basically just cut out a lot more, middle people in the middle and try to get it, from the producer to the consumer, because that is what we are doing it today with reasonably good effect the way we are doing. So I stop there.
Thank you, Rahul. Sumant, you want to go with any thoughts?
No, I think I am on the same page as Rahul, and I think I still believe that we are a society which will really come out of this pretty well, and there will be huge benefits of it. I think it's early days for us to kind of say that there is going to be a major problem. Yes, there will be adjustments, there will be changes, but that's positive. I think I still believe that things would be much better off for our country and for our society. And I'm on the same page as Rahul on some of the points that he mentioned. And one area which is healthcare is going to see a major boost in this whole space. There is going to be a lot of work on tech and health together, and that's something which is going to see a major positive movement for the country.
Ramkumar?
I think from my end, I would say that unlike any other natural calamity where your physical infrastructure would have got affected, like a flood or earthquake or something, this you're not going to be spending to rebuild a nation again. This is more of disruption, which has have stayed at home, and the economy is certainly affected because of this. But you're not going to be spending millions on rebuilding any of those kind of things. In fact, interestingly, I read somewhere in the newspaper article today saying that Hyderabad, a lot of flyovers are getting completed because none of us are outside. So I think somebody is working hard to get those completed. I mean, hats off to them for sure. But the way things around us will change is going to be completely different. I think human to human will know how to respect each other. I mean, much more than what we used to be. And of course, digitally, everything is going to change. I think a lot more companies will start thinking about working from home. Maybe 20-30% of their population suddenly will start thinking that, no, how do we work from home? Or probably 4-day work life, like what Microsoft has introduced, or something like that. So those are new things which will end up happening. I think we'll be back to normalcy in a year's time, where old habits is what we will revert to.
Thank you. Raghunath?
Yeah, and I see a lot of positivity. The reason is I'm General Secretary of community here, so which is about 400 villas community. And last 1 week we have been working together to ensure that everybody is safe. We do have foreign return travelers. The human side of it is really astounding in the sense everybody geared up. We immediately formed a disaster team. About 45-50 residents came in and we learned how to operate every facility within the community. And the way we handled last 1 week and the way everybody came forward, including government authorities, local corporator, and public health officers around who come every day to check foreign return travelers. When I've seen all this and the efficiency and dedication, I think India as a country, I think is proving its human side, the solidarity, resolve, and the swiftness with which they adopt technology, caution. And I've become very positive person last 1 week, though I am spending sleepless nights in my community as a person who has to spearhead this. But great positives. So I'm very happy as a person seeing this crisis, though there is a false side, but a lot of positives.
Thank you. Thank you, Raghunath. My own view is that as humans, I think we'll solve this problem. And I agree with Rahul. Hopefully, we'll not see another pandemic of this scale. The biotech industry in US and Germany and Europe and other places will hopefully solve this problem or able to kind of curtail it in the future so it doesn't become a huge issue like this. Super optimistic that things will get back to normal soon. Hopefully, that's in 2-3 months, not too far away. In just to summarize what I've heard and the questions that came up, I think the overarching point here is the RBI, to a certain extent, SEBI, the Finance Ministry are all here to help corporates and individuals to look at the different options from the whether it is from the loan perspective or the working capital perspectives. So talk to your bankers, talk to your relationship managers. They are here to help you. There have been guidelines provided. It doesn't mean that there is a blanket statement that everybody should opt in. And I think Ramkumar explained it really well, that depending on your situation, you have to evaluate whether it makes sense to opt in or be opting out, right? And I think as Sumant had explained, there are several different ways for MSMEs to approach the banks, utilize the different types of facilities to kind of work through their cash flows. Again, as people have said here, and Rahul has also said here, cash flow management is something that you have to look carefully and understand and plan for the next 6 months or 9 months or 12 months, depending on the nature of your business, depending on the nature of your customers and how your revenue flows down. So understanding all that and kind of, I guess, being in touch with your bankers to evaluate new loans or kind of thinking about what to do with the existing loans is the best way forward. Yeah, I think there are enough things that all the regulators are also looking to help out. And if I think situation changes, we have to again step in. So I think on that note, I would like to thank everyone. Thank you, Rahul. Thank you, Suman. Thank you, Ramkumar. Thank you, Raghunath. and also thank the TiE organization, Funny, and everybody else here for organizing this webinar. I think it's very helpful. Hopefully, we have been able to touch on different topics here and give you a good perspective on the announcements that have come in the last couple of weeks. Thank you all. Have a wonderful day.
Thank you.
Thank
Thanks a lot.
Thank you so much,
Thanks, Funny.
Suresh. Thanks for this engaging conversation, and thanks all the panelists. It's very reassuring that bankers, regulators, and everybody in the financial space are willing to help entrepreneurs, individuals during these trying times. In the past, we had a session from the senior government office bearers and officials who've been reassuring the Commissioner of Police and the government people from Telangana. Also, the doctors who came on one of the sessions in TiE Talks, they've been really stretching their time, and their teams are helping solve this crisis. We'll keep bringing more and more useful sessions for our community here. TiE, which is a body of entrepreneurs and a lot of members who come and listen to these talks. Thanks for all the attendees who are participating through this session. Coming up tomorrow is another webinar. This is the link that shows you we're going to celebrate the success of six founders from Hyderabad who are featured in the 2020 Forbes Asia 30 under 30 listing. These are the startups in our community, members in TiE Hyderabad. We'd like to all of you to come and join this webinar tomorrow at 3 p.m. Thank you all. Have a great weekend. Bye-bye.
Bye-bye.
Thank
Thank you.